Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, a general disclaimer: this video is only for educational purpose. Please consult your financial advisor before investing and trading. So now let us discuss what we have mentioned in our last video. In our last video, we have mentioned that on the election week, market has swung almost 4,500 points in a day, in 5 days of time, and after that, Nifty ended on a positive note. Lower degree charts have entered into overbought territory, so we were not expecting any kind of decisive trend for the last week, and we have discussed that next week could be a consolidating week or some sort of profit booking could be seen, and there was no profit booking, but at least market went into a consolidation and market performed on our expected lines. So now looking at to the last week's pattern, let us discuss what could be the trend for the next week and further on. So friends, now let us go to the Nifty daily charts and we'll try to figure out what could be the trend for the next week. So let me take you to Nifty daily chart. This is the Nifty daily charts. I hope you can see. This is the Nifty daily charts. You can clearly see that last week. Let me stretch the chart so that we will have a clear view what was the trend last week. Now this is Monday. So throughout the week, market traded sideways. It didn't correct it sharply. Didn't neither it rallied sharply. It just remained in a particular band of almost you can say 23,200 on the downside and on the upside 23,481. This was the narrow range which market traded throughout the week and ended on a flattish note. Let me go to the Nifty weekly charts. Now we are last week we have discussed that weekly charts. Last week weekly chart was a long-legged doji, so a consolidation or a profit booking cannot be last week. And last week we were expecting some sort of consolidation or a profit booking. So last week candle you can clearly see it is a narrow range green candle. It has moved highly in a very tight range between maybe 300 points almost, and didn't see any decisive trend for this particular week, but it ended on a flat to positive note. Now looking at this particular pattern, what could be the trend ahead? Now again we are looking at this particular setup. It is a range bound setup for a decisive trend. Now or 5 days of a long consolidation. Next week we might see a very sharp move either on the upside or either on the downside. So now what could be the trend deciding levels for next week? Now the trend deciding level would be the highest of the last week, which is 23,481 to be precise. If Nifty crosses, we will take a round figure. If Nifty crosses 23,500 and if it sustains above those levels, then there are chances that we might see another leg of impulsive rally, maybe 250 to 350 points rally in the next week. So traders should watch out 23,500 closely, and once that is taken out, and if it's nearing the close, one should go long for an upside target of maybe 23,700, between 23,700 and 23,800. Now on the downside, the crucial support would be around 23,200, which is a round figure. Until and unless Nifty doesn't closes below those levels, I feel the trend would remain strong. If Nifty closes below 23,200, then there are chances that Nifty might uh, drift down towards the level of 22,900 in the coming weeks. So as I said, next week would be a crucial trend deciding week. Once these important levels are taken out, 23,500 on the upside and 23,200 on the downside, we might see a decisive breakout. So definitely, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 23,333. Below that, the second support is placed around 23,200, and third support is placed around 23,940. Whereas on the upside, the first resistance is around 23,610. Above that, The second resistance is around 23,786, and third resistance is around 23,933. These are the crucial supports and resistance level for the next week. Traders should watch out this level closely and trade accordingly in the direction of the primary trend. And primary trend as of now is positive till 23,200 is not breached on the downside. Now, friends, let us discuss the derivative data of Nifty calls. On Nifty calls, you can clearly see the action was seen in 23,500 calls, 23,600, 23,700, 23,800, and up to certain level 23,900 also. Now here the important thing is the implied volatility is too low. The option premiums are flat. There has been a rise in the open interest, rise in the volumes. So as I said, 23,500 could be the decisive level for Nifty to breach, and if it closes above those levels, then we might see an extension of rally towards 23,700 to 23,800 on the upside for the next week. So looking at this particular data, the data remains to be positive. So as of now, nothing to worry about it. Now, friends, let us discuss the Nifty put data. In Nifty put, the action was seen in 23,400 puts, 23,300 puts, 23,200, and 23,100 puts, and of course the psychological mark of 23,000 also. Now here you can see there has been a drop in the option premium. That means the undertone of the market is bullish, and smart money is already into writing the puts. Writing the puts means smart money is bullish, and it will propel the market or push the market on the upside. But as I said, for a clear direction, Nifty needs to break 23,500 on the upside, and then one should go long. Now there has been a rise in the open interest. There has been a rise in the volumes. The implied volatility is also in comfortable zone between 11.09 and 12.04. So looking at this data, as I said, the data is positive until unless Nifty doesn't breaks 23,200 on the downside. I don't think there is a panic situation in the market. So definitely the data is positive, and once one remains to be positive, but once the breakouts happens, one should go long, which is 23,500 on the upside. This was Nifty. Now, friends, let us go to the Bank Nifty daily charts, and we'll try to figure out what is the pattern in the Bank Nifty on the daily charts, and we'll try to analyze what could be the trend for the next week. Now, again, as I said, Bank Nifty has been trading in this particular rising channel since February 2024, and it has maintained this particular channel. Currently, it is on the verge of a breakout. Yes, some 200-300 points, or almost to be precise, Bank Nifty needs another 200 or 300 points rally to break this particular range. Last week, as I said, since Monday, Bank Nifty also traded in a very tight range of in the close proximity of 49,500 on the downside, and on the upside 50,233. So again, the trend deciding levels would be this particular range. Once that is broken out, which is 50,252 or 50,260 odd month, I will take a round figure. Then one should go aggressively long, because after those levels are taken out, Bank Nifty has potential to test 51,000 to 51,200 in the coming week or coming days. On the downside, as I said, 49,500 could act as a very strong support. If that is taken out, decisively supported with strong volumes, then one should go short for maybe another 500 to 700 points of downward trajectory, because we might see that impulsive wave on the downside. If that is taken out, 49,500 could be the very crucial support for the next week. Now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is around 49,693. Second support is around 49,444. Third support is around 48,888. On the upside, the first resistance is around 50,252. Above that, the second resistance is around 50,678, and third resistance is around 51,133, which is the lifetime high. So these are the crucial supports and resistance level in the Bank Nifty. And I would like to suggest traders should follow the strategy of first half an hour to 45 minutes high and low breakout strategy, which we have been always discussing in our reports, in our videos. One should mark high and low of first 30 minutes or 45 minutes, whichever is comfortable to the individual traders. Wait for the breakout. If it breaks on the upside, go long. If it breaks on the downside, go short for intraday purpose only. As of now, the overall trend remains to be positive. So now, friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 50,100 calls, 50,500 calls, and 51,100 calls. Now here you can see there has been a drop in the option premium. There has been some shedding into the open interest of particular strike prices, specifically 50,100, which could be a breakout point. Then has been a shedding in 50,200 strike price also. Also, there is a slight shedding. That means the smart money has might have started booking profits after writing this particular call. So decisively, if 50,100 or 50,200 is taken out, then one should go aggressively long, because after that there are chances that we might see a sharp short covering, which will lead Bank Nifty to start uh, uh, heading towards the level of 51,000 to 51,100 in the next coming weeks, or maybe 7 to 8 trading sessions. Now friends, let us discuss Bank Nifty put data. In Bank Nifty puts, you can clearly see there has been a drop in the option premium, which is significant, which means the smart money is already into writing the Bank Nifty at the money and out of the money puts, which is a bullish sign. There has been a rise in the volumes, rise in the open interest, but there is no shedding at all. That means there is no profit booking seen in this particular writing of the Bank Nifty puts. This is a bullish sign, because the smart trader are already in a thought process that Bank Nifty might witness a breakout on the upside. That is why there is no shedding at all in any open interest in any particular strike prices. You can clearly see in that. The implied volatility is between 12.04 and 13.04. It is in a comfortable zone, but uh, uh, a downside breakout cannot be ruled out. So we can say that if we say 49,800 put, you can clearly see where the concentration of the volumes is very strong. If that is broken on closing basis, 49,800, then only there are chances that put writers might start to go for a cover. That means they will start booking their profits or start exiting the writing of the puts, which will push the Bank Nifty on the downside. But as of now, it is unlikely until and unless Bank Nifty trades above 49,800 mark. So overall, as I said, the trend is positive. Market is waiting for a decisive breakout of this last weeks of a tight consolidation range. If it breaks the higher range, one should go long, and if it breaks the downside range, one should go short. This should be the strategy. A simple strategy should be adopted by the traders for the next week. Now, friends, let us come to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is LIC of India. Let me take you to the daily charts of the LIC, Life Insurance Corporation of India. Now this is the daily chart of the stock. Sorry for this. This is the daily chart of the stock. This is the, you can clearly see since listing, the stock has given a rounding bottom breakout. The breakout was in January 2024. Breakout point was around almost 930. Then it rallied towards 1175. Again, we have seen a pullback after taking support of this particular trend line. Again, it has started inching higher. Now this is a very bullish sign for the stock. You can see the breakout or an impulsive rally is supported with very strong volumes. Here you can see RSI is also in a comfortable zone with a positive sign. So definitely the stock is looking very strong for investment perspective. So long-term investors, short-term investors, positional traders can buy or accumulate LIC on dips to maybe 1024 for an upside target of 1200 in short to medium term. Short to medium term, I think, is a time period of next 3 to 4 months for this particular stock. So definitely the stock is looking very good. One should have this stock in this portfolio. Again, I would like to recall the levels. Accumulate LIC of India on dips to 1024 for an upside target of 1200 in short to medium term. So, friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.